Good afternoon, everyone. It's Quan and Sons coming at you with another edition of the Bitcoin Bull Bear series of Trade Devils. Last Friday, Sam left us with a bullish count where he had the correction completed, had the one in, a very, very deep two, and then had us beginning to put in the three. He called that a low probability scenario because of the two being so deep. So I wanted to start this video where I'll cover also what I believe is a pretty improbable count on the bear side that happens to measure very well. I wanted to start this video by talking about probabilities. So, as you know, as traders, really all that we know is the probability of something based on historical price action. And our goal is to try to optimize our entries and our exits and our leverage and other factors relative to the trades that we believe stack probabilities in our favor, right? We're not fortune tellers. Nobody knows exactly what price is going to do next week or tomorrow or the next year. Some people like to believe they are, but there's nobody on this planet that can do that for you. I've been doing this for 23 years, and I can guarantee that if someone claims that, you should immediately discount at what they're saying. Um, Probabilities are interesting because if you look at the world only through the lens of probabilities, then you are going to miss out on a lot or miss recognizing a lot. Um, One analogy that I like to use when talking about probabilities is that the average human has a 1% chance, or maybe even less, of catching a cold, a common cold. But we all know what a common cold feels like, and we certainly catch enough of them because 1% is approximately 4 a year. Um, if your nose is running and you start coughing and you might have a slight fever, but you don't feel like something is too wrong with you, you'd be crazy not to consider the possibility that you've caught a common cold. And similarly, when the symptoms are there, the data is there, the evidence is there, even if something is low probability, you have to consider it when it starts looking like it might be that, right? So part of the reason why I like Sam's 1-2 count, despite it being relatively improbable, is it's a clean count. You're not violating any rules. There's no stretching of the guidelines beyond recognition, things like that. Um, Now, I personally don't think that's where we're headed because probabilities do matter, and I think there are cleaner ways to count the price action in more probable ways. But as a bull count, that's a good count for me. So I wanted to propose something that is not my base case bear count, but which would take quite a lot of time to explain. That might come on Friday, but something that I've found measures quite well, surprisingly well actually, and as a result of that, I'm willing to discount the fact that the time transpired in this correction is relatively short compared to the impulse that it's likely correcting. So I have here in front of me um, a BLX chart. BLX is apparently some kind of index that has tracked the vast majority of Bitcoin's life. If you recall from a couple of videos ago and last week's video, I used this to make a case that either the cycle was in here and we're correcting all of this, kind of a scary assertion, or that the 3 was in here and this is the 4 of the first major macro cycle for Bitcoin. I'm not going to talk about those counts today. The point of this chart is nothing more than to talk about the duration of the likely duration of corrections. So you can see here that I've measured every major correction in Bitcoin's history. I've pulled the fibs for it, and you can see that they're quite deep, all of them. This one's almost 100%. This is the 886 line right here, so it's even beyond that. Now keep in mind it's in log, okay? Nevertheless, very deep. This is a correction that I claimed was a triangle that's within this impulse. So even within it, though, 78.6. Since it's a triangle, it has to be 4, and 4s typically don't retrace this much, but at this time scale, it's not uncommon to find that. And then you have this, which I depending on what you believe is either a 4 or a 2, that goes significantly deeper than 786, almost to 886, and takes a very long time. So I have it on the daily, as you can see here. So each bar represents a day. And since crypto never sleeps, it's literally a 24-hour day, not a trading day. So let's look at the relationship between these corrections and the impulses that they're likely correcting. I say likely because there's multiple ways to count this, but we'll consider, multiple counts as we do this time sequence analysis. And I think the punchline of this story is that it's highly unlikely to find retracements that take less than 25% in time of the impulse they're correcting. This is not just true of Bitcoin, but really any asset, frankly. And typically, it's more than that. Typically, it's between 382 to 50%, very much like a 4 relative to a 3 in terms of price retracement. Let me pull out a calculator, and let's prove, at least through Bitcoin, that what I'm saying is actually true. So very hard to argue that this correction isn't of this impulse, right? It's such a young asset here. It started here, and it's gone parabolic up and balls deep down. So there's got to be a 1-2, or I don't know what you count the 1-2 as, 1-2 of the 1 or whatever, but it is a 1-2. And so for the purposes of this analysis, we just care about that. And so you have a 164-day retracement that is correcting a 346-day impulse, right? So 164 into 346 gets you 47%. I've found something along these lines to be very, very common. Here you have a triangle that is contained within this impulse. So, but even this triangle, which would be measured correcting from here to here, as a percentage of this entire impulse, okay, this correction as a percentage of the entire impulse that contains it. So not even this one, but just this one is 178 days into 744 days of impulsing, right? What do you get? Even that's at 24%. And obviously I'm doing the math correctly, but picking the wrong pivots, because this can't be correcting a move that happened after the correction was over, right? But the point being, something like a 24% correction is very unlikely. Or I don't want to say very, it's unlikely at this cycle degree or primary degree, or at a degree that spans multiple months and quarters and years. This one, 410-day correction, is more likely correcting the move from here to here, right? So 410 into 744 gets you 55%. Even if this were correcting all of it from inception, right? That would be 744 plus 164 plus 346. So what is that? 744 plus 164 plus 346. 1254. So 410 days into 1254 is still 33%. So even if you have this as the correction of all of this, we're still getting to 33%, right? The reason why I'm bringing this up is we've only been correcting for 184 days since the all-time high. And I think it's extremely difficult to argue that this correction isn't associated with this move. Now, I don't care what you call this, the 5, the 3, the 3 of the 3, whatever it is, but this correction is clearly associated with this. I think it's very difficult to argue against that. So what is that as a percentage? I mean, we're not even at 20%, 17%. So, I mean, it's very easy to argue that it's only 25% over, guys. And if this is the correction that is correcting everything from May of 2007 all the way to, Q4 last year. Again, I don't want to get overly bearish here, but this could last a long time, in other words, right? But that's not the point of today's video. Today's video I will cover, since it's a shorter, kind of lighter Monday update, I want to cover one case that has us correcting all of this, potentially even all of this, I guess, but I think that's so improbable that more likely all of this, um, in something like 20% or 21% or something like that, okay? That's why I said I'm going to cover an improbable case from a time sequence perspective, but from a Elliott measurement perspective, it's a very clean count, and I actually like it a lot. I think it's probable, despite the time issue. So let's delve into that. The double zigzag that I'm proposing could be what we're seeing. Okay. So let me pull up a clean chart. So here we have 3-hour Bitcoin, not on log. This is arithmetic. So why do I think a double zigzag is probable on a move like this? Before I start measuring anything, I want to make an observation, which is not part of the rules or guidelines in the book, or any of the books or the materials from Elliott Wave International or any of the other sources that you may draw your rules from. But it's an observation that I've made just doing thousands of charts over the years, which is that in a double zigzag where you have potentially A, B, C, W, and X, and then an A, B, C here, if the first zigzag is very deep and sharp, I mean, this is almost a straight line down, and had like I don't know the exact retracement, but over 70% retracement from inception to the all-time high, you can't have the second zigzag that's connected to the zigzag by the X here be as deep, because obviously you'd be in negative price territory, right? However, this does happen, and it actually tends to happen quite a bit in very sharp corrections. I recently looked at a ticker stock called LKM, Lisa, Kenny, Mallory, LKM. Okay, I have that, if you put it on log scale, as a double zigzag, very similar to Bitcoin, not in shape, but in terms of the W being very sharp and deep, the X being much lighter retracement than a typical X is, and then you have a very sideways but downtrending Y. Okay, so my theory, take it or leave it, but based on many charts of observation, is that on a double zigzag where the W is extremely deep, the Y tends to be not as deep, so not a one-to-one extension of the W off of the X as normally you would do for a double zigzag, but makes up for it by taking a much longer time. The slope tends to be much narrower. Okay, so let me just introduce the double zigzag that way, because I think a lot of folks, they go to the textbook and say, well, the Y is usually the same size as the W, or correlated by 618 or something like that. And so, man, 618 of this is super deep. Is that really possible? Well, yeah, sure, it's possible, as long as it's not negative price territory. Is it likely? And given that this is the price trajectory, is it likely on that this zigzag having a slope much more mellow than this one is going to retrace all of a sudden that deep? I would say very unlikely, right? Okay, so why do I think this is an interesting double zigzag to consider? Well, it actually nails a lot of the key guidelines for double zigzag. Firstly, the wave shape of the W is undisputably potentially a double zigzag, right? Or a single zigzag. It's very hard to argue that this can't be a zigzag. This is clearly an impulse. We covered that last week. This can clearly be counted as an impulse. We also covered that last week. And this is very clearly a flat correction. It's 335. It's one of the cleanest flat corrections in all of Bitcoin history. The wave shape is very clear. So it even measures pretty well. The most likely measurement of the C leg of a zigzag relative to the A is approximately 100%. But if not 100%, then it tends to be related by some Fibonacci number, like 618, 127, 1618, something like that. So let's measure it. very close to 127, right? It's totally credible zigzag. The B retraces a very common level of the W. You know, a little over 618. Not anything to be concerned about as far as the measurements are. The only thing that can be concerned about is, well, if it's a double zigzag, then the Y can't be related to this one, because if you do a price extension on it, here to 5.9K or so, to the top of the X, 100%, I guess it doesn't take you to negative price territory, but it gets you down to 1955. It's possible, but I feel like this, the slope of this, if you call it an ABC, or I don't know how you count this, but the slope of everything after the X is just too flat for this to make sense to me geometrically, right? So I would say much more likely it ends around here, the 618, which is certainly, if you kind of just imagine a channel, a parallel channel drawn here, certainly contained by that channel, right? One other reason why I think a double zigzag plays so well as a potential count is that in a double zigzag, you should expect the X to be lighter than in a double three or triple three combination, where the X, the guideline says the X should retrace 90% of the W or the Y, depending on where the X is. So if this were a sideways pattern, you know, we covered this in last week's video. The only way the X is credible to me is if this is the beginning of the X, the A of the X or something, where it's like an A, B, C or something, where the X ends around here. But that's not the case we're covering today. We're covering the case where it's a double zigzag. This is its X. And the two instances in which an X often is lighter than the 90% guideline is, one, a triangle is being connected to the W. So this would be a triangle. We talked about that last week. Or it's not a double or triple three. The X is the X of a double or triple zigzag. In a double or triple zigzag, the retracement of an X is never as high as 90%. It's not invalid at 90%, but it's highly unlikely. The range is much more like 382 to 618 or something like that. I've found 382 to 50% to be the range that I feel most comfortable with as likely. But, you know, we measured this last week. This was a little south of 40%, between 382 and 40%, something like that, right, of this move. So not only does that measure well, but there's another guideline, not a rule, a guideline, so a tendency, where the X breaks the channel of the W in a double zigzag. So let's channel this one. So if this is A, B, C down, look at how well this parallel channel contains the move. There's a tendency that Elliott wave corrections travel in parallel channels. Whether sharp or flat, the parallel channel tends to contain the major pivots, right? And so here we have A, B, C, potentially, and it's almost perfectly channeled. And look at how important this median line is for that channel. I mean, it bisects the whole move, and it's almost like a roadmap for the downward trajectory. So, and the X, if you have the X here, breaks this channel, this parallel channel, cleanly. And then after it breaks it, the ensuing sequence has a different slope, as it should, right? So you can draw a bigger channel that contains all of the zigzag, double zigzag, once it's complete. But while it's in progress, this is the biggest channel you can channel, right? So the X would have to assume, I guess it wouldn't have to, that you could still call this the X, right? But if you're going with this double zigzag theory, then you're counting this as A, B, C for the X, and A, B, C for the Y. Now, you've got the retracement that fits the double zigzag standard very well. You've got the breaking of the channel of the W by the X that fits the standard pretty well. And you've got 618 to 100% extension or projection of the Y off the W as a pretty credible range of prices where this could go, right? So this is still in progress. So obviously, the channel shape can change. But if we channel what we have so far, the 618 hits the lower boundary of this channel to the tick almost here. Obviously, the more sideways it travels, the more into the channel the 618 level becomes. But if we assume that this is A, B, and then C down, we could do another measurement, which is the C of this Y, this proposed Y, should be approximately 100% of the A as the most probable length. So something like this, from here to down here, off of the B. Yeah, so you have 100% here, the next most likely, either 618 or 1618. We're already past the 618, and this is not looking like a completed impulse move down, to me at least. So, 100% to 1618 as a likely range gets you to this level. Lower channel boundary past the median line for the second zigzag. At pretty close to a likely length of the Y off of the W. So that's the count I wanted to cover today. We can measure the waves to see where we might be on that count now. But you can see why I'm gravitating towards this as a possible scenario, right? It is a very clean measurement. There's very little to argue other than time sequence. Not enough time has transpired, okay? But like I said, just because the time sequence is improbable to be close to over at this 184th day, doesn't mean that it can't be. And the measurements that are so nice for this double zigzag option offset that in terms of probabilities. So let's zoom into the 1 hour to see if we can make sense of this move down. So I'm going to focus on this last proposed C leg of this proposed double zigzag. This one is an extremely tricky move because it's the worst type of wave to try to count. Fibonacci extensions don't work that well here in terms of identifying which move is which and kind of where we are in this count. And you've got all types of little moves here that could be lots of things. You've got something that could be a zigzag here, but it could also be a flat correction, expanded flat, A, B, C, like that. You've got this thing, which could be a sideways kind of combo pattern, or you could have it as a zigzag, something like that, A, B, C, or something, right? And then you've got this tiny move that is itself a very clean 5 wave. 1, 2, 3, 4, 5, something like that, like here, 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 followed by a straight line, basically, right? And then a very substantial retracement of that straight line that makes it difficult to count this. So, in other words, there's no high probability count on this move. Is it an impulse? Is it a zigzag? Is it a double zigzag? Is it I guess it can't be a sideways corrective combo, and those are, I guess, your key options. It can't be a diagonal because there's just very little to overlap given how sharp the move down has been in terms of the 4s and the 1s. So it's either some kind of corrective structure or an impulse, right? So in the theory where we're putting in a double zigzag, this has to be an impulse. It can be a diagonal, but I just don't see how you fit a diagonal into this move. So let's focus on the impulse option. We know from our extensions before that we're expecting a high probability area for this C leg to end to be around here. This is the 100% extension or projection from the A, and this is where the y should end if it's going to be related by a Fibonacci number to the w, right? So this is quite a big range. Does the count bear out a possibility where it gets us there? And I think it does, right? We tend to be focused on lower time frames all the time, and so it's very easy to say this is a completed 5 wave and that's the only way to count it. But if you zoom out, there's been bigger impulses than that even after the X has been put in. So if we have this as 1, 2, 3, 4, 5, to me that's clear as day that this could be a 1, 2, little 1, 2, right? There's an argument that this could be 1 all the way down here in 2 as well. But just let's go with the obvious visual one of 1, 2, 3, 4, 5. 3 is not the shortest. Obviously, it's the longest. No overlaps. Very clean wave count. That would make this 1, 2 of the next sequence. This would have to be the 3. I mean, it's so sharp that it's it's not even a channel. It's a line. You know, so 1, 2, 3, 4, 5, 3. Correcting the 3, or this could be 1, 2, 3, 4, 5 down here, ending here, and then this is a expanded flat correction. The reason why I highlight that is if that is it, then we got some alternation with this sharp zigzag too, right? And then, you know, the bull count, I guess, could have this from here all the way down here being a completed extended 5, where you have a leading diagonal here. It does measure very well, actually, guys. I don't have the time to delve into the 5-minute to measure it for you, but if you're curious, go zoom in on this price sequence here, and you'll see that it measures well as a leading diag. Something like 1, 2, 3, 4, and then boom, 5, right? 1, 2, 3, 4, 5 of the 5. That certainly plays, but since this is the bear count, another way to interpret that is 1, 2, 3, 4, 5. 1. All of that's the 1. Extended 1. And then a 3, 4, and 5 that needs to be put in that gets us to here, right? Now, I don't love that count. Ones tend not to be the extended ones. So I would favor the 1 being short and then the 3 and the 5 being extended. So going to my original 1, 2, okay? 1, 2 of the 3, 3 of the 3, 4 of the 3, and then all the way down here, 5 of the 3, okay? Still on the 3. I know it's long, but still on the 3. 4 of the 3, 5 of the 3, putting in the 4 of all of this 3 so far, and then 5 to end it somewhere down here. Okay, does that make sense? Well, let's see. It is a short one, but it's just so neat and perfect. 1, 2, 3, 4, 5. It's the easiest wave count in this whole sequence. And then if the 3 is extended, it makes sense that the 1, 2 looks larger than the 1, 2 of the same degree here, and is, you know, a move that could even be of the same, looks like it could be of the same degree as this entire 1, 2, right? And then it backs it up by putting in some major big waves here. 1, 2, 3, 4. 5, right? These are substantial waves here, and then 4, and then 5 down here. So that would be 5, 1, 2 of the 3. You know, 3 of the 3, 4 of the 3, 5 of the 3, right? Now, the reason why I like that count is I spent a lot of time analyzing this. And you could call it a zigzag. I think it's a little bit challenging because there's a lot of diags and kind of 4s overlapping 1s that make it a tough zigzag as a count. Nevertheless, assuming that you can count it that way, what else could it be? Well, I think this is a triangle. So you're like, what? How is that a triangle? it's either a triangle or it's a WXY where the Y is a triangle. First of all, look at the sharpness of this move and the volume off of it. That just screams out as thrust to me. Okay. Then you have the declining volume, right? And then you have all these zigzaggy moves. So if this were a triangle, this would be this would be the A, double zigzag B, C, D, E, and then the thrust. Something like that. Okay. I started thinking this way because if we are in a double zigzag and it's a short 1-2, this being a 4, which if it's a triangle would force it to be, makes a lot of sense to me. Again, 1, 2, 3, 4, 5. 1, 2. Start labeling it. One of the two, two of two, three of two, four of the two. Sorry, 3. What am I talking about? The 2. 5 of the 3, right? 5 of the 1 of the 3. So all of this is the 1 of the 3, 2, 3, 4 of the 3, and 5. 3 is definitely the longest wave. If this is a triangle or some sideways combination, like a zigzag, then an X, and then this Y being the triangle, and then this being the 5, it actually measures, and from a behavior standpoint of the sideways 4 and a sharp 2, alternating it makes sense to me. I'm sorry, this would be the sharp 2. 1, 2, 3, 4, 5. All of that would be the 1, and then it'd be 2, 3, 4. Yeah, right. So, and then this would be the 5 of the 3. 3, putting in the 4, which looks sideways to me. This looks sideways, and then 5. Now this is not measured, obviously, because we don't know where the 4 is. But let's say it lands somewhere down here. Somewhere between 100%, which would make the C the same size of the A. Of this proposed Y, or even south of that to 618, which is the projection of the Y off of the W from a Fibonacci standpoint, right? I like to mark my downward moves as red or reddish, red family colors, so something like that, right? And the reason why I did that was not to say this is the right count, but it was to support the idea that we could be in a double zigzag, guys. And when you zoom out like this certainly, it's hard to argue that this is not possible, right? Albeit 184 days is very short to correct 1,000 plus days of impulsing, parabolic, ridiculously bullish impulsing. But if it is that ridiculously bullish and we're not correcting the whole cycle, is it possible? Yeah, absolutely. I think that the measurement of it is so clean that it offsets some of the short duration of the 184 days. So anyway, this is the count I wanted to cover this week. There are certainly many other counts. But I want to make sure that the counts we cover are fully rules and guidelines compliant, that as we cover them, you might learn a thing or two about how we teach Elliott wave theory. I will see you guys next Wednesday or Friday, depending on who does the video then.